You muted. Hold on 1 second. Go again.
Yeah, but why isn't it though? We gotta figure it out though.
Did you test the life?
Can you hear it now?
Okay.
You guys ready?
Just have a seat. Yeah, we're ready. We gotta sit down.
We go.
Sounds of this and that.
Yeah, but we're ready. No, it's frustrating. It's done shit right.
What's wrong with this? That's what we're trying to do. No, nothing's wrong. We just want to make sure everything's right.
Hello, hello, hello.
All right, we're just waiting on Sean.
Mic test. 1, 2.
Sir, yes, sir. Sir, yes, sir.
All right.
To go. That camera looks a little blurry on the screen. I don't know if it's just because the screen.
Which one?
The one you're adjusting right now.
How's that?
It looked like sharper before.
Good.
What do you think, Jose? That wasn't like a little sharper?
It was before, yeah.
Should keep my microphone a little lower, maybe.
Yeah, it's like Stanley hold both hands. Like that. All right, we're waiting for 7 o'clock to get everything started. We're still going ahead, testing out the cameras.
I mean, it looks good on the live on your phone, though.
Mm-hmm.
Yeah, it looks fine.
What are you doing
On on Albert's phone. It looks clear. Yeah, you're good.
You know, like that?
That's perfect.
Nice. Thank you, sir.
Remember that time you told Schmidt to grab the mic with both hands? And the guy on the podcast, some random guy was like, hey, yo.
He didn't get it.
Man.
All right, we got people joining. Perfect. Let's go ahead and just start, take advantage that we're getting started.
When in Rome.
All right.
You know?
Tequila Thursdays.
Tequila Thursday, y'all. Almost the end of the week.
Yeah.
Good week.
Good week, right? I heard what you're about to close.
Hey, man, first of many with this client.
Nice.
He sent 3 other deals, but he couldn't get an extension past tomorrow.
Okay.
He wasn't able to, but moving
Pass it
forward,
down.
it's going to be a nice little flow. I got 2 lined up with him. So
Yeah. Nice.
This one, hopefully.
Cheers, guys.
Yeah, next week. So
Cheers.
Cheers.
Cheers to the end of the
Cheers,
week.
brothers.
Cheers.
All right, we got 3 more minutes.
Almost showtime.
Yo, speak, please.
Yo.
Good evening.
Hello,
good evening.
hello.
Hello.
All right.
How we doing, guys? Just sorry, we're testing the mics. I think we're good, right?
Sound check, mic check.
All right. 6:58. Let's wait. Just give so no one says that we started too early. So what do nice.
And we have another one scheduled to close with him February 15th.
Nice. That was quick though. That was last week. I remember. Was it Saturday?
I first got the file on the 11th, and then on the 14th, I couldn't reach George's. It's like the middle of the week. It was the 14th.
Right. I remember.
14th, 15th.
You were losing your patience because they didn't pick up the file.
Yeah. Guy's ready to go. He sent me every file ready
Yeah.
to close. Like, we just had to just order the appraisal. So I was like,
And you said the appraisal was done yesterday. Came back today.
Yeah. He said their underwriting's just looking at everything. I sent him comps within like half a mile just to make sure.
The lender, and then this borrower does multiple properties, right? Is that
That's a lot of deals? Yeah. He sent me 6 at first. It's just the other 4 are just unrealistic. He's scheduled to close like today or tomorrow. You know what I'm saying?
wow? And yeah,
He just sent everything to me late. He was like shopping around for a while, so I was like, "Yo, you should have sent me everything a while ago." So I got him all the terms. So
what was the loan amount and the rate?
the first one, because it's 100% financing total, is like a little over $1 million. The loan amount.
Yeah. Wow. 100% financing over $1 million.
Yeah.
That's
was
great.
$755. The renovation is $260.
Okay, that's amazing. I mean, it's the simple fact that you get it's the time frame. I know guys that have DSCR deals and other deals in the pipeline that can't get it funded just yet. We went ahead with the fix and flip. Let's.
I mean, he was on top of everything. You know? Yeah. He was on top of everything. Not every doc, is a good client. So
nice.
As long as they work quick with us.
Perfect. All right. Well, ladies and gentlemen, it's 7:00. Let's get this started. Welcome to days. Today's topic is we want to be able to go ahead and just identify. I don't know if you heard. Is identify. They make a deal, and I don't know if you guys know this, but it's usually going to review a couple of scenarios. We have the mortgage department here today. We have Sean representing the lending side, and we're going to discuss credit score and how it impacts an approval. But before we do that, let's just introduce ourselves. I'll be the host today. My name is Jose Martinez. I handle business lending for Fun Rock Capital and Lendmate Capital. To my right, I have.
My name is Joe. With Fun Rock here, I focus mostly on mortgages, any type of real estate imaginable and on this planet, we could get funding for. So.
And churches, right?
Don't forget the churches.
Yeah.
Don't forget.
Good.
Jesus needs funding sometime soon.
All right. And how about Carl? Carl.
Hi, my name is Carl Gillette. I'm also here with Fun Rock Capital. Focus more on the mortgage side and real estate side. So we handle all those as well.
Very nice. Carl's a first timer. So Carl's just, Carl's actually.
No, he
last time you
was
were here, like you were here, but for a brief moment.
Yes.
But now Carl's getting a little bit more involved. Exactly. And now go ahead, Sean.
Sean McClellan, Lendmate Capital Business Financing Specialist. Really excited to be here tonight. I think we're going to get into some deep topics on how credit affects our clients, and it's going to be super helpful.
Very nice. All right, and also to remember, we want to make this fun. We're not a podcast where just it's serious. So let's just just getting down to it. I guess on the mortgage side, credit score. Credit score is important, right? To make or break a deal.
Definitely. So we have options for any credit score. So
okay,
if your score is 600 or below, we can still go 50 LTV.
Nice. Okay, so 50 LTV with a what? So if I have a 500 credit score.
You have a 500 credit score. Let's say you own a property outright. It's worth $400K. We could get you $200K on a cash out.
Okay. Perfect. Actually, before we continue, I apologize, everyone. Just so you know, please look at the chat. If you have any questions, put it down. Sean Colby already presented something to us. Yes, we will be discussing JV partner funding. We actually got one for the other Sean that we have as well. Client is still deciding to move forward. I believe that the client just needed to come up with reserves, money to close on the deal. But we are going to be talking about that. So yes, and just leave your comments there. We'll go back and address them. Okay, so 600 below 600 credit scores. Now you're talking about what type of investment properties, commercial properties,
investment properties. Yeah. So let's say you're looking to take cash out, or you have a mortgage balance, as long as you pay off the current debt, and if you need cash or whatever, as long as you're 50 LTV, so that's loan to value. So, like I mentioned, my example, if the property's worth 400K, we could get you 200K total. So,
Nice.
Perfect. And that's the first, I'm assuming, right? Obviously,
Yeah.
paying off your existing balance.
Yep. And then, obviously, of course, the higher the score, the better.
Okay.
You're gonna pay less points. You're gonna have higher LTV. We have a program for 700 scores and above. We do 85% LTV on cash outs or purchases. If you have a lot of experience too, let's say you own a lot of other rental properties, or depending on the loan, if you're doing a fix and flip, you have a lot of fix and flip experience, you're gonna get a higher LTV as well.
Very nice. Now, these are just for purchases, refinances and purchases.
Refis, but of course, credit affects everything. Ground up construction,
Mhm.
fix and flips. You're gonna get a better deal if your score is higher.
Right.
That is what it is.
What's the minimal score on a fix and flip?
The minimal I've seen is 620.
620 credit score on a fix and flip.
Mhm.
Now, does that what does that affect? So let's assume someone has experience is, let's say, the same.
Mhm.
If they have a 620 credit score and someone has a 700 credit score on a fix and flip, what does that affect, or what does that move the needle? Where's the needle move?
I think the fees would definitely be higher if you have a 620, so you're going to pay higher points. Your
Okay.
rate's
Might be
going to be higher.
Mhm.
They may ask for more reserves as well. If your score is higher, they may ask for 2 to 3 months of reserves. If you have a 620, the lender might ask for 6 months of reserves
Got
to
it.
make sure you can cover the payment.
And
Nice.
Joe, that's because it's a higher risk deal now, right? Because their credit's lower.
Yeah, in the eyes of the lender, it is higher risk. So
Now, also too, when we were discussing this earlier, you pointed out that as far as a 700 plus credit score, you can go up to 85% LTV.
yeah, we can
Right.
do 85 LTV purchases and refis.
Does that mean that it's less expensive, or less expensive, or more expensive? What does that mean?
Well, it's like a sweet spot. So once we get to 85, because most people do 75 or 80 on
Mhm.
investment properties, so you'll pay a little more. 85,
Got it.
pay a little more, but compared to and someone else offering 80 LTV or 75, the higher the score, the better. But we have a program that not many people offers, that 85 LTV. And when it comes to fix and flips as well, if you have experience, let's say you've done 8 or more flips in the last 5 years, we can get you 100% on the purchase and the rehab of the property.
Very nice. Now, you also mentioned you already have a deal right now that was been working. We were discussing it before.
Yeah.
You worked on a deal. How long did that take? Because I know you were flipping out before. You were flipping out because the lender wasn't
Not
getting
Joe,
the
come
deal
on.
done. No, well, listen, he had, rightfully so. The lender was not moving its feet. The client wanted to close quickly, right?
Yeah, the client basically came to me last second. Someone I've spoke to in the past. He realized I was the best option, of course.
There you go.
But he came to me pretty late. It was like a Saturday, the 11th. He came with all his docs. So I submitted it Monday, Tuesday. I got no answers. So I finally made a bunch of phone calls. By Wednesday, they received the full file. I got every single document needed. Appraisal came back yesterday, so right now we're just scheduling the close.
Nice.
Yeah,
And
nice.
that was what? That was
How
quick.
long ago? Yeah.
Yeah, it happened pretty fast. So they got the docs on the 15th, 16th, so it's a week from today, and we're pretty much ready.
They
to
did the
schedule
appraisal yesterday, got the appraisal report today.
Yep, got the appraisal report. Value came back where we needed it to be.
Nice.
So now it's just title and the lender just balancing numbers, and we're just trying to schedule. I should get a message like in 30 minutes to schedule the
Nice.
closing date next week.
That's
Quick
awesome.
question, because you need to be excited. You need to be excited. What is the approval amount?
That's 1,050,000.
Sound more
Woo!
excited, bro.
All right.
$1 million. It's $1,050,000.
I'm not excited until the closing happened
Yeah,
and
I get it.
the wire hits.
Yeah, nah,
Let me ask you a question. What are the points on this type of fix and flip?
For that product, it's it's higher because we're doing 100%. So the guy is paying 6 points, I believe, 6 points.
6 points. Let me just grab a calculator here. Hold on. Loan amount is how much again?
He's $1 million, $1,050K. So
$1,050,000. So $1,050,000 times 6%. So you're looking at $60,030. Wow. Hold on.
That's a nice day.
Amount,
All right. Where are you taking us out to dinner?
All
when I
right.
close
So
this joint?
listen, that's great. Now, quick question: this client, how did you get the client? Was it an affiliate? Was it someone that referred over to you? Were
It
you
was
cold calling?
actually a client I spoke to maybe 6 months ago about
Okay.
business funding, business cards. So I mentioned to him like, "Hey, I mostly do real estate." He randomly contacted me a little bit before Christmas. I would say a week before Christmas, and let me know what he was trying to get done. And
So
we got
the
him set.
business model works. You go in for one thing, however, you have a plethora of programs,
Mhm.
and because you went in for business lending, you're probably trying to get them an unsecured type of program, SBA loan, etc. But you were able, by asking questions, asking the right
Right.
questions, you were able to go ahead and understand what their needs were or what kind of clients they had, and now he was able to send someone to you. And I'm sure the guy is loving you now because of the speed, how quickly you were able to get it done.
Yeah, and
Right.
asking the right questions is everything. I asked him, "Hey, what do you need this money for?" Because first he sent me other.
Wow. Wait, you asked him, what do you need the money for?
Yeah, I was like, "What do you need this?" He sent me other business partners of his, and then he told me like, "Yeah, they buy houses. They need cards to buy, supplies and
Yeah.
whatnot to fix up these properties." So I let him know, "Hey, if you're looking for funding for fix and flips, construction, I'm your guy." So 6 months
That's it.
later,
All right, so that's good. I mean, listen, that's it. How about Carl? Carl, how about yourself? I know that Carl, you're new to the space with us. You're just getting your feet wet. You do have a couple of deals under your belt.
right?
I know. Tell us a little bit about the client that you also had a client that we actually came in for mortgages, and then we were able to go ahead and provide him money on the business side, right?
Correct.
Tell me a little bit about that deal. How did you get that deal? Was it? I think it was a personal referral of yours, or who was the client?
Actually, this deal came from here, from in-house.
In house. Okay,
In-house.
perfect. All right.
Okay. So yeah, basically, I qualified him. He wanted to do a refi cash out.
Okay.
Okay, so he was also explaining to me how he wanted to remove inquiries, and he wants to get some extra cash out. So I mentioned to him that we also do credit cards, we also do business funding, and he said, "Let's give it a shot," and then we did, and I believe we.
So
closed
did
it.
he? And I think he. So you got him right now because I know the mortgage is in the process of closing. You're waiting on the clear to close.
Exactly.
But he needed the money for what again? Was it the appraisal? What did he need the money for?
No, actually for his business.
For the business. Okay, so once again, asking the right questions,
Yes.
he was able to go ahead and provide him a different service. Why not? If you ask the right questions, understand the client's needs, why not? Right. And this particular client, I know because I spoke to him, we got him a line of credit for, was it 80 or 50,000?
I believe it was for 50,000.
50,000 line of credit, monthly payments. The client had no debt, no business debt at all. I think it was only open for how long? It wasn't even a year.
No.
What was it? 6 months?
I believe it was less than that.
Yeah.
Yeah.
So listen. So the business was open less than 6 months. We were able to get him a line of credit, monthly payments. It was strictly based on the revenue of the business. I didn't have to use tax returns, but his credit score was high. I believe it was in what, 700s?
It was really 712.
712. So that's what we talk about when we go ahead and just identify cross-selling or understanding the client, right? Because that's what we did. We sat down with him, we evaluated all his needs, what he actually wanted, where he was going. I think he also gave you a couple of other real estate properties, right?
Yes, currently we have 2 with him right now.
Right.
There you
And
go.
I think that at the time the pushback was, and this is interesting because the time was, the property is in Texas. He wanted to sell the property, right? Or he was thinking about selling the property, putting it in the market. However, he was only going to net $30,000 to $40,000. We came in and we told him that we can give him that $30,000, $40,000 through the business, so he didn't have to sell the property, right? So that later on, when he wanted to really sell the property because he needed to, whether he was retiring, then he can do so. But it's already built up equity.
Mhm.
So it's just understanding the need of a deal, which is great. I remember that guy. Congratulations on that one. So you got paid twice. You're gonna get paid twice on the mortgage and on the line of credit, which now he's actually moving forward to our no income program as well because he wants additional funding. Correct?
Mhm.
Correct.
Perfect. All right. Well, listen. Now, so that's on the mortgage side, everyone. Right now, on the business lending side, which we're gonna make it hot over here.
Oh yeah.
Sean, is okay. So what kind of programs do you have? I mean, I'm assuming that a client has to have perfect credit in order to get business funding. Is that correct?
Not necessarily. No.
No.
No. I mean, we work with all credit tier clients, so
Okay.
we have something to fit them in wherever they stand with their credit. So obviously, we have what we call an A tier client, A paper, You know, obviously,
And what does that look like? What credit score are you talking about there?
you know, 680 or higher. Obviously, the higher the better, right?
Right.
You know what I'm saying? Been in business 2 years, able to provide tax returns, you know, preferably showing a profit, you know.
But do they need tax returns? Let's say they have a 680 score. Do they have to show tax returns?
No, they don't have to show tax returns. We obviously have the no income doc funding where we can get them, you know, up to 150,000 monthly
Nice.
payments still,
Nice.
you know, and 0% interest. So, you know, what's better than that?
That's amazing. Excuse me. That's amazing.
I'm
Wow.
getting excited.
I got excited there. I got
just
excited
talking
there.
about it.
That's all right.
All right. So go ahead. So all right. So 680 plus credit score.
Mhm.
You have a program where they don't have to show documentation.
Yeah, we don't need to see the tax returns. We don't need to see the bank statements. It's going to be based solely off their credit profile. So obviously, what they look at is their credit score. You know, we do want them to have 680 or higher with all three of the credit bureaus. That's going to be super helpful.
Okay.
Maybe if one of them they're a little shy, we might not be able to get them the max dollar amount. However, we can probably still find them a home and get them some funding.
Which makes sense because not everyone needs 150,000.
Right.
Right. Some
exactly.
people just need $20,000 for equipment, for I don't know, inventory.
Right.
What else do they need the money for usually?
Marketing, hiring staff, inventory. I mean, you name it. I mean, there's all different options. Sometimes they need to get into a bigger office space,
Right.
or whatever it may be. Buying, you know, transportation for their company. So, yeah, there's you know, numerous things that they can use.
So is 680 the only score that you actually take clients on, or what else?
No, not
What's
necessarily. Well, another thing is too. I mean, obviously, we're coming across a lot of people. They have either, you know, startups or a
Mhm.
business that's relatively new.
right?
Another option I like to present to my clients: we have personal loans. You know,
Okay,
not
nice.
yeah, we have personal loans that somebody can use if they're getting paid on W-2. They can provide, you know, personal tax returns. Now we can get them funds that they can utilize towards opening their new business or taking their business.
So
the next
this is a new program, but do they have to have tax returns W-2s?
Not necessarily. No, if their credit profile is strong enough, we will not need that. Now, if they have a little bit lower than 680, we do have a new program we recently launched,
Mhm.
640 or higher. We would need to review their documentation, but we can still get them up to $50,000
Okay, so they have to they have to provide you with documents.
for that particular program. Yes.
Yes.
Yeah.
Okay. You were telling me earlier today you have a no doc program as well, right?
Mhm.
Was that I think it was 660, right? I believe.
Yes. Yeah.
Okay. So tell us a little bit about that because I know that you and listen, guys. I spoke to him a lot. I got excited about it, so this is why I'm like summarizing everything. It was 50,000 as well,
Yeah.
right? 50,000, and I think it was 3 to 5 year terms.
Yes. Correct. 3 to 5 year terms, monthly payments.
And access to that money from what you told me I was surprised. No docs was anywhere between 24 to 48 hours.
Correct. Yes.
On
we
the
get-
personal
yeah.
side, so understand that on the personal side, he mentioned to me was personal funding, right? So you can use that money to pay down credit cards.
Mhm.
You can also use that money for home improvement. So that
Mhm.
actually works well with the mortgage side, right? If you have a client that has a 680 plus credit score, doesn't have to have a business, but they're looking to renovate their property, we can go ahead and do that for the client.
Right.
We had an affiliate actually came to see us. I think it was 2 days ago. He came from Brooklyn, came to see us here. He told us about a deal. He had RVs. He had a series of RVs. Now in mortgages, you can't fund RVs, correct? If unless they have what it's if
It
it's
has to
not
be usually affixed to the ground,
Mhm.
a hut label.
Has to be mowed down.
exactly mold down. So this particular client did not, right? He said, listen, a lot of people were investing into RVs because of Airbnb. However, there's a community of RVs now. And you know what? I'm unable to provide them funding. However,
I think we could do trailer parks. Don't we have some?
we can, but they have to be a what is it?
Affixed to the
They have to
ground.
be
Yeah.
fixed to the ground. Now,
Step
but keep in
around.
mind, now we pivoted and I said, listen, what if you're able to now get all because a lot of them were investors. Now get the investors. If they have a 680 plus credit score, we can get them personal funding. We can either get them money at no income documentation funding. So there's no because they're pre-revenue. Or we can now also get them a personal loan. Now think about it. I asked them, how much money does everyone need to modify these RVs? He said 30 to 50,000. That's really not a lot of money for someone that has a 680 plus credit score. Right. So that ties back into what we kept saying about credit. credit is important. Credit is very, very important. I think that financial literacy, a lot of people don't get. I know I didn't. Going to school, there was really no one teaching me about credit, right? On the mortgage side, how many trade lines do you need in order for you to qualify for a mortgage?
Would be at least 3.
At least 3. Correct. Exactly. So you need at least 3.
Depends on the score and how big the trade line is.
But on average, is 3. Remember when we spoke to the underwriter Stanley as well? 3. Now, what does that mean? What is a trade line?
So a trade line is pretty much like another. Let's say you're added on to someone else's credit. So a trade line, if we give a client a trade line, it might be a credit history of 10 years with perfect payment history, and the limit could be 50K, 60K. Basically, that increases their it lowers their utilization.
You just want more, huh? Screw it.
When in Rome.
No, but you know what though? Also, just keep in mind that a lot of the times there's a primary. You have to have a primary. It can't just be an authorized user.
Right.
Literally, when you go for a mortgage, you have to have at least 3 primary trade lines.
Yeah.
And that's one of the biggest things is that most people say, "Hey, I don't want to take out a credit card because I don't want to go into debt." Right? And that's the bad mindset because credit, you need credit for everything. You want to buy a car or you want to lease a car. Or whether let's say it's a luxury card, you need to have credit.
Yeah, absolutely.
If you have no credit, then they're going to say, I can't get it for you. You can make as much money as you want, unless you're going to go ahead and put X amount of money down, right? You still need credit.
Right.
If you have a credit card, just keep your utilization low. I mean, that'll raise your score tremendously.
I'm glad you brought that up. Yeah.
Yep.
Because that's a main thing that also brings down a lot of people's scores. They have credit cards, they max them out. It's
Yes.
the worst thing. Even if you're on time on payments, I have a client, his score is like a 594. He has 0 lates. But he has so much debt, and he's like at
maxed out,
98%.
right?
Yeah.
He's maxed out on every card.
Yeah.
Brought him to a 594. He's like, why? I never missed a payment. But you're maxed out on everything.
Now, also too, Sean. So, what would you say is that utilization that you want to keep your credit cards at?
I mean, typically 20% or less.
20% or less.
I mean, yeah, because there's a lot of different variables that go into when an underwriter looks at somebody's credit profile. So you may have somebody with a 750 credit score, but maybe they don't have any credit cards, or maybe their accounts are only 6 months old. That's something they look at. How long has their accounts been open for? What's their payment history like? Obviously, like we said, where's their utilization percentage at? All those kind of play a role in determining, how strong their credit profile is, and all that can affect the pricing of their loan and the amount they get approved for.
Correct. 100%. I agree with that 100%. So now it's a 680 score. So 680 score trade lines. What else is it that someone, so they should keep it at 20%, right? Have 3 personal trade lines. What else do you need? What else do you want to make sure that, let's say when someone's doing a mortgage with you guys, what else would you say that you would tell clients, hey, don't do this? Because I know during that time, what is one of the things that a lot of people go or shop for?
People will randomly buy a car.
Yes.
Or, a crazy expense. And it's like, hey, we just approved you for a mortgage. It's in underwriting. We're trying to get you like $500,000.
Right.
Like, don't buy a new car for $60K. Don't do like.
Or they rack up their cards or something, right?
People, between the time they tell, hey, my score is a 680. I'm like, fantastic. And I had a client today. He just got a new Lincoln truck.
Okay, nice. Was it a nice Lincoln truck?
I have no idea, but it messed up his credit. I don't care how beautiful the car is. He jacked up his credit.
What is that?
That Lincoln possibly?
What was that? What was that? Now that there's a term for that, right? What did it mess up for him?
His utilization had messed up because he's paying like $2,000 a month.
And his debt to income. Debt to income. So now whatever he was approved before, now he's adding more debt. So now it means that the mortgage payment, it drops down, right? So now he qualifies for less money.
That wasn't for an investment property, though. Investment properties, we don't look at debt to income, but this was his primary.
Wow.
So because it's his primary, they look at how much debt he pays each month, how much income. So he increases debt by $2K a month. So it takes away $2,000 that he would have been qualified for.
Yeah.
And that makes a big difference in a mortgage payment, right?
It's a huge difference.
What did it drop down as far as the loan amount? Just to put everything in perspective.
He's just not close, honestly. Because
No.
let's say he was close before, he just added $2,000 a month to his debt, so he is not in the ballpark anymore. So You know, that's the main thing. If you have referrals or anyone you're trying to help get a mortgage,
Yeah.
make sure they're not getting new cars, maxing out cards, getting new cars, and making huge purchases.
Okay, so we spoke about utilization. So length. How long do they have to be open for the
2 years? Cards should be open 2 years. I would say.
2 years?
Yeah.
Okay, so length of it should be obviously the older the better.
100%.
So one thing a lot of people make, and one of the mistakes a lot of people make, is that if they don't use the card, they close it down.
Yes.
What do you think about that? So should they leave it open? Should they run the card? Maybe $100? Maybe put it towards a gym membership? What should they do?
I say always leave it open. Especially, I had a client had a card with like a pretty decent limit, like $8,000, and he just closed it.
Mm-hmm.
And it makes no sense. If
Right.
you have a card with a decent limit, keep it open.
Right.
Have a $100 balance and make payments on it.
Yeah.
Or whatever. Just
Because
keep it open.
now they can use that card, and they're if it's got a high limit, now it reflects on the utilization, and
Correct.
overall it makes the utilization look better.
100%. Also, something that a lot of people should do is before you trying to get a mortgage, or your client is trying to get an investment property, or whatever the case, or looking for new credit, always go back to the credit cards after 6 months and ask for a limit increase. You'd be surprised, because now, let's say utilization was at, I don't know, 30%. You ask for a limit increase, and now that increases, that utilization drops down. So that's also huge too. That's also very good to understand and to learn, as far as to how credit works, right? Because you need credit for everything.
Mm-hmm.
At the end of the day, you know what? If cash, they say cash is king, but honestly, credit is going to allow you to make different moves.
Mm-hmm.
Think about it. If you have a 680 credit, if you have bad credit because you have X amount of money in your pocket, you can't qualify for up to $150,000 in no income funding. If you have a 680 plus credit score today, we got someone $50,000, then another 38,000, then I believe another $30,000 through two different types of funding. So there you're looking at 5, 6, 7, 8, 9, 10, 11, about what? 118, $118,000. No income, no bank statements, no tax returns. So just understand the how powerful credit is, right? And then if the clients or the clients that we work with have bad credit, we have a program in house, right, Joe? Or let's get it called, and we have a credit repair program in house, right? Okay, so and what exactly do we look at, or how do we roll around? I mean, because I know that you guys offer it for free as well sometimes, right? And that's we seeing the end game. What's the end game? The end game is getting them the mortgage, getting them,
making our clients bankable as possible.
Very good. I like that. And that's huge. I think Stanley had a client where it was Marjorie. The client's name was Marjorie. I won't say her last name, but you know what? This client came to us, and sometimes it's just nurturing the client. The client came to us. She had a lack of credit. We went ahead and provided her secure credit cards. After 6 months, those secure credit cards turned into credit cards. So now those limits increased. Her credit score when she came to us was, I think, 564. Now it's over 700. So that's huge.
Was she looking for a mortgage?
This is a mortgage client. And that's important. That's important when you're doing this, because you want to be able to go ahead and just provide the client options.
Yep.
Right. Now let's go a little bit into the questions over here that we have. So we have JV options. Sean Colby asked about JV options. So your JV options on the mortgage side, how do they work?
We're Schmidt now.
Yeah.
We have a few options depending on how much you're willing to put into the deal, but really they're kind of like private investors. I feel like they have to see the deal, and it has to be worth.
It's funny you say Schmidt. I spoke to him earlier today, and we actually, he got me an approval for a client out of California. So this client, when he came to us, said he had money, right? All he didn't have was the experience. We were able to find someone in his area that was able to partner with him, because he does construction. So he was bringing in his experience, and we were able to now get a first-time investor, because he had no experience at all. We were able to get a first-time investor, 90% financing on the purchase, 100% on the rehab, because now he had someone with experience that knew what they were doing.
And a little background: if a client has no construction experience, it's very hard to get ground up construction.
Yeah.
I mean, it's basically impossible if you never did a construction project.
Mm-hmm.
So
Yeah,
Right.
huge.
if you can find a partner with experience, then you can get a lot of deals done.
And we have those options, right? So yes, we do have JV funding. Honestly, Sean, it all depends on the profile, the deal, what state. But yes, we do have it. If someone has but they keep in mind they have to have the money to close,
Yeah.
the money to go ahead and come off of the down payment, the credit score, and you know what? They have to have the property.
Yeah,
They have
they
right.
still need some skin in the game.
Yeah,
you know what I'm saying? It's
100%.
Somebody's other than that, it's just an idea.
Exactly,
Is
one
there
hundred
ever
percent.
an
Table
option where
something.
someone would provide like 100% of the down payment money and closing costs as a JV partner? Like, is that really?
Listen, I don't know.
No.
To be honest, I don't think
No.
so. Because think about it. Why would he
Why?
want to partner up with you? Or
Why?
if he or she
Why would they
does,
just take on the deal themselves then?
and
right?
if he or she does, then what's going to happen is they're going to give the whoever bought the deal in a little bit of money.
Yeah.
Yeah,
They gotta
Right,
get
'cause
the
it's
whole
not
deal.
worth it.
Referral fee.
Yeah.
All right. So the next one was that's good. I'm familiar with this. That's the major of my business 2025. Any updates on funding for these particular clients, Rodolfo and Yazer? We have. Oh, so Yazer, I think Yazer isn't Yazer is Roger James. That's your affiliate, right?
Roger James?
Yeah, Yazer. Isn't that the lady that we're doing the personal funding for?
No, that's from Maryland. No, that's Maryland.
No. All right, Roger. Then we got to get back to you. Do me a favor. Do me a favor. Send me an email. info@brokersconnectiongroup.com. I'll get an answer for you after this podcast. All right. Needed the money. Reminds me of Andrew Dice. Oh, you know what? You're there. So Roger, who's your affiliate? Just so that and who is your rep? Just so that I can go ahead and go back to them and figure out what the update is. Daryl. Okay, perfect. Daryl was sick today. That's why he's not in with us. But I'll get you an answer. Just do me a favor, please. Send me an email, info@brokersconnectiongroup.com. I will go ahead and make sure Daryl gives you an answer. All right. Okay.
Perfect.
No worries. All right. And were these what type of clients were these? Were they looking for mortgages? Were they looking for business lending? Okay.
Well, Daryl was working remote today, so I'm sure he's been pushing it through.
Mm-hmm. All right. Perfect. And then all right. So the next one, Sean Colby needed the money. Reminds me of Andrew Dice, Jack and Jill.
Jack
All
and
right.
Jill went up there.
Next one was Sean again. What was his income? Usually here for income based certain percentage brackets based on how much annually. What do you? Oh, Sean, do me a favor. Unmute yourself. What do you mean by that? What's up, brother? How
What's
we
up,
doing?
Sean?
How are you?
How's it going, Sean?
I know you had.
What
salmon
are you
last
making this
Yeah,
time?
what are you making this time?
Whoa.
Chicken.
Whoa. Ring that bell.
All right, go ahead. Nice. Okay. Okay. You're talking about a cash advance. Okay. Now,
Okay.
is
Yeah.
that the lowest income or is that the minimal income? 15,000. No.
We averaged the 3 months, right?
No. We do average at 3 months. So we actually are up with a lender that's a hybrid. What they do is they average up to 3 months. If you're in the state of New York, it's 4. But what they do is now they average it out, but the minimum income is $5,000 a month. And this is a line of credit monthly payment. They have to have the credit score. They have to have the credit score and they have to be in certain states. I believe there's only 4 states that are restricted. Right? But think about it. Monthly payments. Now keep in mind what they do charge is a monthly rate, which is fine. It's just like any other credit card, right? Like let's assume a credit card. You have several different credit cards in your back pocket. You have a credit card for gas. You have a credit card that's high risk. A credit card that actually gives you points, etc. It's the same thing, similar to it, where a line of credit. A line of credit for most people who can get how many people that can get a line of credit, been in business for 6 months, making $5,000 or more? Not that many. Now,
they don't like say, hey man, we're not like, look, you're not even gonna be worth it unless you make 15 grand a month.
Correct.
Yeah.
Because on
75%. So what you guys have a low of 5 grand a month, that's interesting. I know a lot of people like that.
now,
I wonder what they get.
now keep in mind, it all depends on the industry as well. What type of industry? So
Yeah.
it can't be a trucker make you $5,000,
Yeah.
but it can be a medical office make you $5,000. So just putting everything in perspective. And honestly, there's a lot of guys in the industry, and you know what, we've worked with a couple that what they'll tell you, hey, this is a line of credit. One of the biggest things you guys have to understand is everything is about perception. I can tell you, right? If I presented to you a cash advance, daily payment, right? I can go ahead and present it differently aside from, it's a daily payment and it's a cash advance, because most people don't understand what a cash advance really is or the structure of how it works. All you see is a factor rate, approval amount, payback amount, and term, right? And the payment, whether it's daily, weekly, or sometimes monthly. You have to understand that it's not the factor rate is not an interest rate. That's very important. A factor rate is not an interest rate. Let's compare apples to apples, not apples to oranges. A factor rate is the cost of money. I give you $1, you pay me back $1 and change. On average is $1.45. That's what you pay me back. Now, the rate, which everyone's infatuated with, is going to determine how long I give you the money for. I give it to you for 12 months, the rate is going to drop down. I give it for you for 3 months, the same dollar amount, same payback, the rate is going to look higher, right? That's what everyone says. So now the cost of the money is still the same, but you're paying it back quicker. The reason why is because it's unsecured. There's no bank statements attached to it. There's no collateral attached to it.
No real estate.
No real estate. So you know what? On a term loan, you have to provide tax returns. How many business owners I've come across a lot haven't filed taxes?
They're behind. Yeah.
They're behind, or their tax returns are negative. You understand? So everyone likes to say, hey, this money is predatory, this money is bad, etc. So no, there's businesses, unfortunately, that don't qualify for the better tier programs. It helps them, right? Because now you have access to the money. It all depends on the ROI. Are you going to make money? This money shouldn't sit in your account.
Mm-hmm.
This money should make you make money. And I apologize if I'm going on a tangent. I'm just very passionate about this because a lot of people say, oh my God, I got taken advantage of. Oh my God, I had no idea what I was signing. Oh my God, you know what? It's predatory. It's just ridiculous.
Right.
You knew what you were signing. You know what you came across. You just needed it at the time.
And we're not the ones that put them in the position where the
No.
credit score is below a 650.
I'll be honest with you. If you're being taken advantage of, you're a bad business owner. You understand? If you're being taken advantage of, and I get passionate because I just disliked, and I hear that all the time. Oh my God, there was a predatory lending, and they told me this, and this. No, first of all, it's not a loan.
Mm-hmm.
What it is I'm buying your future receivables.
Mm-hmm. At a
Now,
set cost. Yeah.
Right. Exactly. At the time, I said, yo, I'm giving you 10 grand. You're like, oh, wow, I could do a lot with that money. Oh my God, I can go ahead and do this and this. Now, when it comes down to paying the piper and actually paying the lender, oh my God, I need help. Oh my God, they took advantage of me. Oh my God, this and this.
Right.
Listen.
And they got to remember, they got a 580 credit score because they weren't paying somebody. They were not paying somebody. They earned it. You know what I'm saying?
And that's what it is. But you don't want to. All right, so do me a favor. You know what, Mr. Business Owner? File your taxes. Write this off. Did you know that you can write it off?
Mm-hmm.
This isn't, so write it off completely. And your taxes. It's a tax benefit.
And let's not forget, some of the advantages to these programs is you're not penalized for paying it off early.
Right. Huge.
Many times you're going to get a discount for paying it off early, depending what time frame that borrower is capable of paying it off.
Sean, I'm glad you say that because that's what it is. Think about it. Everything is based on your future receivables. And I don't know if a lot of people know how revenue-based funding works, but it's a projection. You show me your last 3 to 4 month statements. You're doing, I don't know, $10,000 a month. So now I'm going to assume that you're going to do $10,000 in the next upcoming month. So what I'm going to do is I am going to go ahead and give you $10,000 for the upcoming months that are coming up.
Mm-hmm.
I'm purchasing your future receivables. You usually go ahead and make X amount. So I'm going to give you 10 grand today, but I'm buying, let's say 14,000. I'm going to advance you the money right now, but it's going to cost you 14,000. It's going to cost you $4,000 for me to give you that money now. So you don't have to wait on the sales. I'm advancing you the sales that you're going to eventually receive.
Mhm.
That's all this is. Right. And it's not a loan, it's not predatory lending, it's nothing of the sort. It really is. I'm purchasing your future receivables.
Mhm.
Okay, so that's one of the things. Go ahead. I'm sorry, someone had a question.
Cool. Sounds interesting. I would say that, for something like that, purchasing the future profit, like what is the P&L? Is that, you guys even look at that? Or is that
Usually no.
No.
Yeah, usually if it's not like a tremendous dollar amount, usually we don't need to look at profit.
What we're gonna look at is your cash flow.
Yeah.
And I'm sorry, was it Sean asking the question or who's asking the question? Sean. Okay, cool. No, great.
Great name, by the way.
No, so listen, so what's going to happen is we can't use a P&L, we use cash flow. Cash flow is your bank statements. And we keep in mind, the reason why they look at the bank statements is because we have to understand what it is that how are your habits managing your bank statements,
Mhm.
right? You have $20,000 come in. Where does the money go?
Right.
How can you, if I give you a daily payment, can you pay it back? That's why they look at daily payments. Right. At the end of the day, what does your bank statement end with?
What can they afford?
Exactly. I can't give you, if I can't give you $100,000, but the daily payment is going to be, let's say, 400. And now at the end of the day, every day when I look at your bank statements, it says negative $100, $1, etc. And I've
Overdraft
seen that.
fee.
But don't get me. There you go. Exactly. But don't get me wrong. I received a client today through an affiliate. The client is a construction company. The client, and this is what I say. Sometimes there was an affiliate was helping out the business owner because the client was turning on jobs. As a construction company, they get 30, 60, 90 day ARs, right? So they don't get paid after they complete a job immediately. So the client wasn't able to take on jobs. She said, Jose, I've been to several different companies. They provide me only daily payment options. I said, okay. First of all, I'm not every other company. That's number one. Number two is, let me ask you a series of questions. Number one, what's the credit score? Credit score is 700. Okay. How long have they been in business? They've been in business for 3 years. Oh no, 2017. I apologize. 2017. Okay, great. Do they have tax returns? Yes, they do. She showed me 2023 was 1.8 million.
Wow.
It was showing a profit of 300,000. I said, listen, your problem isn't that the client doesn't qualify. Your problem is that you've been working with the wrong people and haven't asked the right questions. Right now, I said, listen, this is what I need from you on the XYZ. I'm sending you an email. Boom, 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 boom. I said, I have several different options. One, it's a line of credit, but it's going to be monthly payments, but it really costs a lot of money. Unless the client needs it now, do not take this money. I don't want to even give it to you because then you're going to come back to me and say, Jose, you gave me a bad deal. Number two, I said I have a term loan option. I can give you 3 to 5. I can give you a 5-year term, monthly payments. Interest rate is probably going to be about, last one we did, I think, was 15% APR. That one can close in 2 weeks. But I don't want to give you that. Next one, I said, listen, let's start off with this. I can give you an SBA. I can give you an SBA. I just need to go ahead and submit it. I got an answer today. SBA said, yo, we'll give them $500,000. $500,000. This guy was great, right? Any MCA guy would have loved to take advantage of this. Average daily balances were guess what they were? $123,000 average daily balances.
That's huge.
He brings in $200,000 a month.
Yeah.
Everyone will say, you know what? Cash advance, cash advance, cash advance, cash advance. Sometimes that's not the case.
Right.
You understand? So now we're looking at an SBA loan, $500,000. The client loves me. It's a 10-year term, monthly payments, and interest rate, I believe, is prime plus 4 or prime plus 375. Huge.
10, 11%.
Right. Something around 10 years.
10 years.
Right. And the client was only getting approvals for 60, 70. No, I think it was $80,000, $90,000 through a cash advance.
Yeah.
Right. And that's what we offer for everyone doing cash advances. We don't want your cash advance deals. We really don't. We want to be able to provide you the additional funding.
We'll take them. We'll take them, but
we will take them. But and trust me, we have the relationships with the best lenders to be able to give you the better approval than you would on your own.
we have the know-how of which investors.
I've been in the industry for 13 years. Sean's been in the industry for 8 plus.
Yep.
So we have the relationships. I have a buddy of mine that actually joined us now. That's on here as well. He's like, Jose, I don't want to talk. I just want to listen. But you know what? And this is what we do. You understand? But now forget about that. Let's get you the better programs. Let's get you the SBA. Let's get you the, if the client has a property, um, if he's on right now, he can mute himself. He provided me, he heard one of these podcasts and he gave me what was it? A hotel, Hilton. He got the appraisal was 17 million. We're getting a second behind 9.3 million. So that's huge. And there's just understanding what the clients want. And this is why we have the mortgage department. This is why we have the business lending department. And this is why we have the credit repair that would be able to help everyone out.
Yeah.
Right? And just understanding everything.
It all ties together.
It all ties together. Exactly. Now, all right. I think we had another question here. Okay. Great. Can you send me the link? I have to run. This is valuable. All right. So, Stefan, I don't know if you're still here. I think that we got the information on the form. I'll send it over to you. Once again, the link is brokersconnectiongroup.com. Go on there, join the community. We're able to go ahead and provide you the information, but most importantly, what we're doing is providing the CRM.
And the
Right.
resources, yeah.
And the resources, which, by the way, you know what? Shame on you guys. You guys weren't on the CRM, the CRM training. I only hear there's only 6 people in CRM that, that have access to the CRM. I know we have over 60 people that pay for the membership. Guys and girls, take advantage of it.
Tremendous tool.
Huge because who's that? Roger. All right, Roger. Tell us a little bit about the CRM. First of all, did you join the first one? Did you join the last one? Yep. Nice.
Shout out to Lucas.
Shout out to Lucas, bro. And that's what it is. And then later on, we're gonna first of all, like I said before, we don't want to just provide you guys, resources and have to pay for it, right? That's not what we're trying to do. We're not trying to provide you business in a box. We're not trying to charge you $5,000 for something that you're not going to use ever in your life, right? We're trying to provide you the resources to be able to become successful, whether you are a beginner, intermediate, or advanced. You still need a CRM, right? So, Roger, perfect. I'm glad you said that. The CRM is amazing. It allows you to text, email, and also call within the system. The calls, Roger, the calls are recorded, right? So now you can go back to the client and say, hey, Mr. Jones, you know what? Or if you don't remember what you said to the client, you can go back and listen to it, right? We use it ourselves as well for marketing. You can write notes in the system. You can go ahead and set triggers. I don't know if you know that as well. So now let's assume you spoke to a client, you send them an application out, it can move. And then if the client you haven't received anything or haven't moved the milestone to a different milestone, what happens is that it can now send an email or a text message after 2 days or 3 days. Why? Because the time is key, right? In order for you to go ahead and get this. Now,
out of sight, out of mind. So
right.
It's just a reminder for them. Yeah.
Now, also too, you guys, on the mortgage side, you guys use the CRM. We've gotten a lot of deals from the fix and flips, new construction. So I don't know if you guys know this, but we integrated Facebook into that. The leads that you guys get are Facebook leads. How are those leads that you guys get right now?
They're very wonderful.
Yeah.
We communicate by calling, texting. So the platform it works and it's very wonderful.
And when you speak to the client, are they engaged? Like, do they say yes, I did, or no, they hang up? What happens?
Oh no, they say yes, they did. They communicate very well and they're very professional.
Very receptive.
Yes.
All right, cool. Loosen up a little bit. Come on, Carl. Come on, Carl. Loosen up a little bit. All right, great. All right, what else? I mean, so we spoke about credit. How about let's just I know we're coming to a close at 7:47. I mean, Sean, what type of deals do you have working right now in the pipeline for that are exciting that should be good to go? I know you have a real estate deal that you referred over.
Yeah, I got a lot, man. I got real estate deal going on. Got a business bank term loan going on that's looking pretty good. Got a couple of revenue-based financing programs. I'm working with Chris Schmidt too with some JV deals, but those are more pref equity, startups. But these people have a nice presentation put together. They know what they're doing. Those are,
And I
potentially.
think he's being, you know what? First of all, congratulations on those.
Yeah, thank you.
But I think he's being a little bit too modest.
Uh-uh.
One of the deals that we actually have with a bank. So remember, we have bank relationships,
Yeah.
right? National banks, regional banks. What we do is we have a team that goes ahead and contacts them. Hey, we have deals. I want to send them over to you. A lot of these banks are national banks probably in your own backyard that we've built relationships with.
Yeah.
One of them, which is I think they're regional, they went ahead and provided us an unsecured loan, 45,000. Interest rate was 8.5% over 5 years.
Mhm.
Huge.
Pretty great, actually. That's
Now,
amazing.
this one it's a full doc file. This is a full doc file. Full doc, when we say full doc on the business lending side, what was it that we request on the full doc file on business lending?
We got a couple statements. I guess like 4-month statements,
Mhm.
business tax returns, personal tax.
How many years business tax returns?
Preferably 2 years.
2 years business tax
Yeah,
returns.
yeah, they do
4
ask.
months of statements.
Yep, statements. Profit and loss with a balance sheet. And in some cases, depending on the industry, might need like AR. But other than that, it's not a ridiculous amount of stuff that we're asking for.
That's it.
And they're gonna get the best of the best. You know what I'm saying? That's the cream of the crop, rates, terms.
Mhm.
So and very cost effective programs.
Now, remember, when Sean speaks to a client, it's an evaluation, right? That's what happens. He goes through. Some programs don't require bank statements, only tax returns. Some programs do not require the tax returns to be positive. So there's a lot of different things that we're going to focus on when we go ahead and submit the client. Let's see right here. What else? Income.
Saw someone mention a multifamily in Detroit.
Multifamily in Detroit. Who mentioned that?
I think Sean. If you
Sean, was that you?
yeah, a little bit higher.
Okay, multifam. Tell us a little bit about the deal.
Okay, yeah. So John told me on that one. So this is a guy who's construction and he's got full time. He does GPU in Detroit. So he's got one multifamily under his belt. Cash flowing, right? He built it from the ground up. So that's one experience that he had. We had not in the last 3 years though. So he stopped after COVID. So
Anything in the last 5 years?
With the experience, but I've got him on the private side for the down payment. So he's gonna probably have a GE partner for the down, which is probably 150 grand down. That's
Okay.
about 800 grand in rehab, probably.
Big rehab.
Probably $1 million, maybe in purchase.
All right. His partner with the rehab, does he have a lot of experience, like similar deals? Because then we could get it done. If as long as he has.
That's probably something like it's kind of a hard nut to crack, but I know he won't be able to get the GED for the purchase because they only do 90 days max, and they're just like
Okay.
7.5% a month. But he's gonna need probably a GED partner with experience for the purchase and maybe down payment. He'll have some skin in the game though. He's pre-qualified for some credit term and does have income. He's got the multifamily he owns is cash flowing, so he's growing. You can see it's taking a long time. He's kind of hesitant, but I think that if we take a look at it, I think we can get it done.
Well, I was mentioning the experience with other similar flips because you said the rehab's like 700K, 800K.
300.
Yeah, around that ballpark. Yeah.
What is the property worth? Around the same amount, I think.
No, the ARV after it's done over 1 million. So I think I got that wrong.
So Sean, let's do this. Let's do this because I want everyone to get down to an actual type of a science to it, right? What is the ARV?
Over 1 million, so 1.3.
Let's say 1.3 million, and this is on an average 70%. So we're looking at 910. How much is the purchase price?
I would say, so I think the rehab 700, the purchase is around 100 grand over that. So I don't know if that's
So
Yeah.
800 purchase, 700K rehab.
1.3.
It gotta be worth the ARV. Gotta
Gotta
be
be higher.
Yeah.
It does. It wouldn't make
Total
sense.
loan to cost. Yeah.
Keep in mind, you always want to do. So you said that the purchase, if the ARV is 1.3 million, multiply that by 70%, right? 1.3 million times 0.70.
Gotcha.
Right. So minus the 910, minus the 800, minus 700, it wouldn't make sense.
Yeah, you'd want the ARV
Yeah.
to be like
Yeah,
like
because
at least 2 million. Yeah.
like 2 million, 2.25 realistically.
Yeah.
mhm.
Yeah.
Yeah, it has to be incorrect because they're right. They're right. Everyone's like, yo, it's wrong, because 800,000 plus 700,000, that puts 1.5 million. If the ARV is 1.3, you'll be on a
Yeah.
negative.
Yeah.
It wouldn't make sense.
ARV gotta be like 2.25 at least.
Okay.
Okay.
but
We
We
can
can
still
definitely review it.
we can definitely review it. Make sure that Sean Colby is with whom? You're with Jonathan, right? Good.
Yeah.
Good. Yeah, 100%. Correct.
Correct.
I think
Okay.
I might have spoken to him once. His name starts with a Y, right? Yeah, I spoke to him. Yeah. Yeah. I'm actually I'm
Yeah.
Yeah. Yeah. Yeah, I believe we have a program, but we could find a way where we could find like a JV partner with experience is what he would really need because it's a big rehab.
Yeah. Big rehab budget.
The property's worth 800, the rehab 700. You're gonna need a partner with experience.
It's a large budget. Yeah.
Doing big flips and.
Mm.
All right, let's
Okay. All right.
I would say let's discuss it with Jonathan tomorrow and let's come up with a game plan.
100%.
Yeah. Yeah.
All right.
Yeah.
Right now it's just an open forum. Everyone, if you have questions, please put it down. Put it down in the chat. Let us find out what type of deals you have, or unmute yourself. Let us know what type of deals you're working with, and see how we can go ahead and place it. Always remember too, what we do is on Saturdays, 11 o'clock, we're doing live underwriting. We tried it on Facebook last week. There was some technical difficulties. I think we're gonna do it on Zoom again, similar to this, so that if you have deals, just send it over to us. Let's get it done right away. We work on Saturdays. Trust me, I'm a workaholic. My wife gets upset at me, but we want to get deals done. Take advantage of it.
Right.
Now, just to I guess we have a couple of minutes if no one's posting questions. What do you guys think? I mean, because obviously right now we're coming into a new president, right?
Yeah.
What do you guys think as far as to what you've seen before to what you've seen now? Because today I had a friend of mine. He owns restaurants in Miami, New York, Hamptons. He owns about 5 different restaurants. I was surprised for him to call me, and he wanted to know, hey, listen, what do I need to apply for a loan? And the reason why is because they usually are very successful. It's a big company, and from what a lot of you been hearing from a lot of people is that business has slowed down January, right, and December. So I don't know. What do you guys think? Is it because of the election? Is it because people are just didn't know what's going on? I know that now there's a lot of different things that was signed a couple of days ago. What's your input, Sean? I know you're big on this. So let's start off with you. What do you
I
think?
mean, all political opinions aside.
And listen, keep in mind, this is not political. This is not. We're not saying anything. We
We
just want to know, how is this going to change, if anything, or influence business owners,
Mm.
right? So that's what I mean by that. How
Yeah.
is this going to happen?
again, so all political opinions aside, if we're going off of statistics, if we're going off previous data, look at your, your retirement account. Look at, you know, gas prices, cost of food, during Donald Trump's first term, right? And then kind of look what happened the last 4 years, right? Kind of everyone knows everything kind of trend downwards, inflation through the roof, everything. So I do feel small business owners now have a little bit more confidence.
Okay.
That they're feeling a little more optimistic, and believe it or not, just that alone will help. I believe, you know what I'm saying, will help things kind of go through a little stronger. You know what I'm
I
saying?
agree with
Yeah.
you. They feel more confident in the economy.
Yeah. They kind of feel like they're working with somebody, like them or not, that's up to you. You know what I'm
Correct.
saying? I really don't care. But if you're looking at how everything performed from 2016 to 2020, obviously was stronger, right? So
Okay.
yeah. So
Not
I
to
feel
cut you
that,
off. I just know we got a couple of minutes. So mortgage side, what does that mean as far as rate? What do you guys think?
Well, it really depends on the Federal Reserve, how they're going to drop rates. But
Mhm.
just from speaking to a lot of people, I mean, a lot of business owners, a lot of people that own properties I've spoken to in the last few years, they were waiting for a change in administration. So regardless of political views, I feel like people are more comfortable investing in real estate, investing in the economy because they just feel like they'll have a better turnout. So,
Mhm.
like I mentioned, I've had a lot of clients I haven't heard from in months. After around Christmas, December, my phone.
Now they're willing to pull the trigger, or
they're
just take
like
that.
calling nonstop right now.
Yeah.
So
It's true, yeah.
they're just calling and seeing what's happening, and
Yeah, I think it's a good opportunity though, just to like re-engage with people, and
It definitely is a difference. I feel like
All right.
people are more confident in putting their money to work and saying,
yes,
And I think we have someone. So I have John. Once oil prices goes down, I'm sorry, you will see a surge in business. Wait 6 to 8 months. John, are you able to unmute yourself and tell us a little bit about what you mean by that? Oh, there he is. Oh, so this is John. Guys, ladies and gentlemen, this is a good friend of mine, John. I invited him on. He is in the business as well. And I just wanted his input, see what he thought, see what he thinks. And John, tell us from a different perspective, what do you think as far as the presidential, obviously the inauguration that happened a couple of days ago, new president coming into office? Is that going to be better for the business? Is that going to go ahead and influence us? What's going to happen?
Your father was saying before, he has performed when he was the president, everything generated more revenue for small businesses because all the price indicators were a lot lower.
Okay.
I feel that's why I wrote the 6 to 8 months.
Yeah.
Going to see interest rates drop.
Yeah.
Oil prices drop, and I think that's going to be a huge surge in businesses across the board.
Absolutely.
Because of the whole continuity of
Yeah.
the United States as a business.
Right.
Right. And everything needs transported, right? So fuel costs, you know what
Yeah.
I'm saying? It's gonna be lower cost of goods overall, hopefully. So yeah, and
And that's a huge thing too, because the truckers of the world, it runs our economy.
yes.
yes,
Prices are costing more than that means supporting the wholesalers.
Exactly.
And those prices have to double or triple compared to what's been going on lately, and that's why now there's being truckers in my side of the business, like so they know
Yeah.
small business funding. Truckers are considered high risk.
Yes.
Because of the high prices
Mm-hmm.
for gas, and they're charging double or triple the amount.
Right.
And they're not getting the right job unless they're a larger trucking company with 15, 20, 30 trucks that can actually keep the cost down.
Right. And higher profit margins for them,
100%.
interesting.
All right. Well, listen. You know what, John? I'm glad you came in.
Great. Yeah, that was
So,
great.
oh wait, one more. What is it? 3 to 4. The way that he has been moved. What?
3 to 4 months, I meant he said.
Oh, 3 to
Okay.
4 months.
3 more
Okay.
months,
Okay. Well, listen. Yes. You know what? Right now is all up to speculation. But we have been, I think there's a different change. And like I said before, people are now reaching out to us and saying, yes, I want to move forward. I think they're starting to feel a little bit more confident.
sense of
I got 3
confidence,
phone calls
yeah.
today of people saying, yes, let's go ahead and do this. What do we have to do? On the mortgage side, I think you also mentioned before, people are coming back from before.
Yeah, 100%. Yeah, people are coming back. They're ready to pull the trigger. They're like, hey,
I think it's a
get
great
appraisals
opportunity. Yeah.
in. Let's close as soon as possible. So people are confident in the business sector, the real estate sector. So
100%. Fantastic. Yeah.
Yeah.
something else we can do. And as you know, I can send you my deals.
Yes.
For the business owners that want to use their real estate.
Yeah.
To lower interest rates, even though they're refinancing out of a lower rate, they just need that working capital until the market does turn around.
Correct.
Yeah.
So that if they refinance now, let's just say, I think it was 6.85 or 7%.
Yeah.
I think in 6 to 8 months, they might be able to come back with a lower rate anyway and then refinance without taking the cash out and just to lower their payments.
Correct.
Business owners that are reaching out to me are looking for that alternative. And as you can see, Jose, I've been sending you those deals.
Yeah, 100%. No, of course. I mean, listen, and Johnny, you've been in the industry for I think a little bit longer than I have, and honestly, it's even the deals that we're doing right now. It's just different, right? And I love it. I love it. And this is what this is. This is what this community is about. You know what? It's all about using each other's resources. Johnny himself focuses a lot on the business lending side. You know what? I asked him what's going on the business lending side. He set us up with a couple of different lenders as well. And vice versa. We focus more on the long term option. Banks building relationships, national banks, regional banks. I don't want to name any names, but just think about it. Like I said, these are probably the ones that you have branches outside of your office or outside of your house. There's one thing that I do want to point out because Sean McConaughey, which has always been with us, he says, I think regulations might make business more aggressive, but there could also be drop in demands for housing and an increase in the cost of labor if there are any mass deportations. What do you guys think? I guess that's more on the mortgage side. What do you guys think about that?
Said labor costs would go up. You said.
So there could be more regulations. More regulations might. Okay. Right. What do you, okay? So I guess on this one is the mass deportation, right? What do you guys think that would actually does it affect the mortgage industry? Because I know investors may or may not. I don't know how on the investment side. Does this affect the investment side? Yes or no? I want to be politically correct. I don't say anything wrong on camera. But what does that? What does that mean for you guys on your side? What do you think as far as mass
I
deportation?
don't necessarily, because I have a lot of my own friends that do fix and flips. They're part of construction crews, and
Right. I was gonna say, for an
they
investor,
live here. They're born here.
My guys, you know what? Remember, this isn't a censored podcast. You know what? I apologize, and I forgot about that. Listen, to be honest with you, will it cross? Would it actually happen? Would it
I don't
influence?
think that'll.
I don't think
Because let's think about it. Sometimes you're picking up Jose over at a Home Depot, right? Right.
Yeah.
And let's name it. Let's say it is what it is. But let's talk about that. So is that going to affect it? Is the investors that before were picking up people that
I
at
feel like
certain areas?
Or labor.
It's a lot more to gain in your equity and
Okay.
your property. So I don't think people are going crazy about cutting costs for labor on
I say this: if it's a real investor who's really buying and they really buy, they're gonna buy it. They're gonna buy the cost.
Is it going to affect the construction budget?
I honestly,
I tell you what,
That's a good question.
like John mentioned though, if overall, let's think about it. Like if the price of oil goes down, I mean, maybe the cost of materials may not be as expensive now.
Okay.
You know what I'm saying? And also just
Johnny, what do you think? They were.
Yes.
Yep.
It's a lot.
Correct.
Correct. Yeah.
That's crazy.
Yeah.
Yeah.
Right.
Yeah.
Correct. All right. Well, listen. Yeah, a lot of things is going to change. A lot of things are going to change. Listen, everyone, please look out for the email in the community for the live underwriting on Saturday. Last time we had a few people join, but let's do that. Let's go ahead and start working on files. Let's not wait till Monday. Let's not wait till everyone, is working. Let's make sure on Saturday.
Those numbers look good, Sean. Those numbers are great. All right,
That's the ARV. That's the correct information. That makes more sense.
that's doable.
All right, perfect. All right, so Sean, he's gonna. I think you're heading the approval, right? Or you're heading the deal.
Yeah, I've looked at it before. I've spoken to the client, Sean's client, and Yeah, I'll get on board with him and Jonathan
All right.
tomorrow morning, and let's figure out a solution.
All right, so let's go ahead and do this, ladies and gentlemen. I know, John, thank you very much once again for coming on. Hopefully,
you,
we have you. We have you more. We'll talk about it as soon as I get off the phone. Let's talk about it. All right, thank you guys.
guys.
Ladies and gentlemen, yes, no, thank you for coming on board.
Appreciate you guys, everybody.
And you know what, ladies and gentlemen, once again, let's go ahead and make sure that you guys understand a deal is not a deal until you go ahead and present it to us, and we're able to go ahead and present you with an approval. On that end, goodbye. Have a great night, and everyone enjoy themselves.
See you next week.
See you next week and Saturday live underwriting.
Yes, sir.
Right here.
Bye.
Good night.
Right.
Good night.
All right.
Nervous. Fuck.
Say what?
Nervous as hell.
Why are you
stop it.
nervous?
Carl, you did good, man.
No, Carl, you did great.
Yeah, you did, yeah.
Yo, I honestly,
I just need to do more.
Cheers, guys.